Hello, judges. My name is Ishan Singh from Issaquah High School in Washington. Today, I am excited to present my pitch for Lattice Semiconductor Corporation, or LSCC, a company that is uniquely positioned in the rapidly growing semiconductor industry. Lattice is a leading provider of low-power field programmable logic devices, or FPGAs, which are crucial for industries such as data centers, automotive, and industrial automation. Unlike larger competitors like AMD and Broadcom, Lattice focuses on energy-efficient, cost-effective FPGA solutions that cater to high-demand, high-growth markets. They have global reach and serve customers in all parts of the world. With a strong focus on innovation and power efficiency, Lattice has established itself as a leader in edge computing and AI-driven applications. I recommend LSCC as a long buy for four main reasons. First, I believe that the company has potential for growth within the AI and computing industries. As you can see on the right, almost half of their 2024 revenue came from comms and computing segments. This presents a strong opportunity for Lattice to capitalize on the growth of these markets and drive revenue. Additionally, they have several competitive advantages in the industry, including power-efficient FPGAs and intangible assets in the form of hundreds of patents. This leads me into my third point, consistent innovation. Lattice is constantly improving their products and reinvesting profits into R&D. Finally, the company has a strong brand reputation. They have consistently delivered high-quality products for decades and have an established customer base. In fact, they are currently the world's largest volume supplier of FPGA products. Next, let's talk about the semiconductor industry as a whole. This industry is currently experiencing explosive growth, driven by the increasing need for AI, cloud computing, and automation. Within the broader semiconductor market, Lattice specializes in FPGAs. This market, in particular, is expected to grow at a CAGR of over 16.4% until 2029 due to its rising adoption in automotive ADAS systems, industrial IoT, and AI applications. Some of Lattice's competitors in the FPGA space are AMD, Rambus, and Broadcom. Lattice is a niche player in this industry. However, this can be seen as a positive thing, as it provides them with a runway to capture more market share and grow. Lattice has a narrow moat, and this is primarily due to the highly competitive nature of the semiconductor industry, where competitive advantages have to be constantly maintained. Lattice's four main competitive advantages come from their intangible assets, as they have hundreds of patents, efficient scale, as their market has high barriers to entry, a strong brand reputation, and an established customer base. On the right, the Porter's Five Forces diagram shows most of the same things, including low customer bargaining power and low threat of new entrants. There are three key things driving Lattice's revenue. Demand for FPGAs has been growing and is only going to increase given their applications in AI. According to McKinsey research, data center capacity could triple by 2030, and FPGAs have important applications in this space. As touched on before, Lattice spends consistently on R&D to make sure that their products are differentiated from their competitors, which has helped them drive market growth and increase their revenue. And finally, Lattice is continually diversifying their product portfolio, allowing them to reach and satisfy a wider range of customers and grow their market. In 2024, they released new lines of mid-range and general-purpose FPGAs. Next, let's look at financial statements from the last 4 years for the company. 2024 was a challenging year, marked by a temporary demand shock that led to a decrease in revenue, dropping from $737 million in 2023 to $509 million in 2024. This drop in revenue was primarily due to the cyclical nature of the semiconductor market and several supply chain headwinds. However, recovery is already underway. By Q4 2024, Lattice's book-to-bill ratio surpassed 1, indicating strong future demand, and the backlog has increased steadily. Looking ahead to 2025 and beyond, I anticipate significant growth driven by booming AI and computing industries. As demand rebounds, Lattice is well positioned to capitalize on these opportunities. Despite the revenue decline in 2024, Lattice's long-term fundamentals remain strong, with solid cash flows and zero debt. I am optimistic about sustained growth in the coming years. To value LSCC, I initially used a discounted cash flow model. I applied a 10% discount rate, a 4% terminal growth rate, and a 16% 5-year growth rate. However, this model produced a valuation of only $18.80 per share, indicating a 69% overvaluation. The issue here is that LSCC's 2024 financials significantly skew the model's results. I believe that DCF is unreliable in this case because LSCC is already recovering financially, and DCF is not representative of its long-term performance and growth. Given this, I turn to a relative valuation model, which offers higher accuracy by comparing Lattice to its semiconductor industry peers. Using an average PE ratio of 85.6 across comparable companies and a projected EPS of 1.56, I arrived at a price target of $133.54. This method provides a more realistic estimate of LSCC's true value based on industry standards rather than historical distortions. However, investing in Lattice comes with several risks that investors should consider. First, geopolitical tensions pose a significant threat. Lattice's reliance on global supply chains, especially involving key semiconductor markets, could disrupt operations and impact revenue. Much of Lattice's manufacturing revolves around Taiwan, which is currently a geopolitical hotspot. Second, the cyclicality of the semiconductor market means that Lattice is vulnerable to industry downturns. Demand for semiconductors fluctuates due to economic and product cycles, and any slowdown in tech spending could hurt Lattice's financial performance. The company can avoid this by expanding into more stable markets, such as industrial and energy segments. Lastly, high competition in the FPGA and semiconductor space puts pressure on Lattice. Larger rivals like Broadcom and AMD have more resources, and aggressive pricing strategies or technological advancements could erode Lattice's market share. However, given their strong fundamentals and commitment to innovation, Lattice is well placed to avoid these risks and grow in the long run. Lattice has also made strides in their management and governance. In 2024, as part of a restructuring process, they brought in CEO Ford Tamer, who has over 20 years of experience in the semiconductor industry. They are also majority owned by institutional shareholders, including T. Rowe, Vanguard, and BlackRock. Lattice has also made strong commitments to environmental sustainability through their energy-efficient semiconductor solutions, and they have a goal of reducing greenhouse gas emissions by 90% in 2030. The company follows ethical supply chain practices and ensures compliance with international labor standards. Lattice is also investing in reducing its carbon footprint at its in-person offices and improving transparency in ESG reporting, making it an attractive stock for ESG-conscious investors. Lastly, AI presents both opportunities and risks for Lattice. On the opportunity side, AI-driven advancements can increase demand for Lattice's products, streamline decision-making in R&D, and boost productivity and innovation. Additionally, AI enhances structural efficiency, allowing Lattice to maintain competitive advantages in the semiconductor space and cut costs. However, AI also introduces cybersecurity threats. An increased use of AI by hackers can lead to potential theft of proprietary technology, patents, and user data. These risks highlight the importance of strong cybersecurity risk management programs to mitigate vulnerabilities and protect Lattice's innovations. By leveraging AI's benefits while addressing security concerns, Lattice can strengthen its market position and drive future growth. In conclusion, Lattice represents a compelling investment opportunity due to its room for market growth, competitive advantages, consistent innovation, and a solid reputation in the semiconductor industry. With growth catalysts in AI, automotive, and edge computing, Lattice is well positioned to deliver strong returns in the coming years. Thank you for your time.